Hey guys, what is going on? Welcome back to the channel. Again, I want to thank everyone for your support on the channel, all the viewers, all the subscribers. Immensely appreciate the support. Today, because of viewer request, I'll be talking about General Electric, GE here, and I thought I'd do so talking about a strategy known as contrarian investing. I've talked about this strategy in the past. I thought I would reintroduce it here on the channel, this time by talking about GE, why I no longer think it's a very good investment for that type of investing strategy. I'll talk about it in contrast to some other stocks here I think are much better plays to do contrarian investing, and then also what I think about the company as a whole. So very briefly here, contrarian investing is simply an investment strategy that is characterized by purchasing and selling in contrast to the prevailing investment sentiment. So you're basically buying stocks like GE here, a company that you can see here has lost 43.02% of its market value over the past 1 year, and you can really see that here in the 5-year graph. At one point, this company was climbing up above $31 or so before falling back here quite rapidly. At one point, I believe it was down under $16 very briefly here. But nevertheless, it's lost quite a bit of its market share, market value here. The price of the stock has plummeted 45%. And the idea is to pick up this stock because you think the overall sentiment on the stock or market segment is unjustified. You think the price of the stock is much higher than this, but because of either bad news, bad press, investments that are losing favor for hedge funds, large institutional investors, the price of the stock is depressed under its actual market value. Again, you're kind of guessing on that. It's a very high-risk play. But as you guys know from my prior videos, risk equals reward in the stock market. So the riskier the play, the higher likelihood you'll get a very good return. And that's really what contrarian investing is all about. So let's take a look at GE here, as well as a number of other stocks I think are very good investment strategies for that particular type of play, contrarian investing. So if we go all the way to the bottom here, there's a few stocks I've talked about in the past, don't currently own, but I wish I had owned because of the very good performance over the past 1 year or so. So L Brands here, I've talked about this stock in the past. I've done a lot of day and swing trading with this stock. It's a parent company of Victoria's Secrets as well as Bath and Body Works, a couple of brands that have very loyal customer bases. And you can see here the stock price was eroded from $85, $86 or so all the way down below $37 before jumping up here. And this is really what you're looking for in this type of strategy. Looking to buy the stock below what you think its actual price is worth, and then when investment sentiment changes, you'll have a very nice rate of return. And that's really what's happened here for L Brands. You can see over the past 3 months, it's up 23.83%. And again, you're buying companies that you think are unjustly depressed because of the overall investment sentiment on a company. It really doesn't have anything to do with its underlying company. It's simply that when large institutional investors, for example, hedge funds start dumping a stock, the price starts falling off. There's a lot of herd investing that kind of follow that, and the price of the stock can get depressed way lower than its actual market value. Either the stock itself or a particular market segment as well can also do that. So any company in that market segment could also rebound when sentiment changes overall in the investment community. So L Brands is one. Another classic example is Equifax here. As you guys know, it had a lot of negative press about a data breach, and you can see the price of the stock dropped from $140 down below $90. And there's really no justification for this. That particular type of hacking scenario could have happened to any company, any of the other companies that operate in the space Equifax does. Equifax is a consumer credit reporting agency. There's only 3, so it's a very hard space to get into. So no other company could really steal the market share of Equifax. And you can see here over the past 3 months or so since that bad news was essentially publicized, you can see the stock has risen quite nicely here because, again, the underlying company was not affected. There was some bad press about an event that, yes, it did hurt the company, but that could have hurt any of the companies that operate in the space Equifax does. TransUnion, Experian, any of these other large data reporting agencies, credit reporting agencies. There's only 3 in the space. This could have happened to any one of these. The underlying company did not change, and because of that, you can see the stock has started to trend up nicely because really this price here, $94, is way below what the fair value price of the stock was. You simply had some bad press coming out. Some investors started selling the stock, and you had basically this panic type of scenario. Everybody started selling the stock off, but a contrarian investor would buy it here on the dip and then have a very nice rate of return for a swing trade here to sell off or even keep longer term, because again, you've essentially bought the stock on discount here. So Equifax, EFX here, LB, L Brands, two very good stocks for that type of strategy. If we go back to GE here, not quite so sure that this is going to work for GE. Just recently, over the past week, there's been a lot of information coming out that GE has been doing some shady accounting practices. It just came out showing that on its investments and its insurance investments, it's going to lose, I think, $10+ billion over the next quarter or so, which was not disclosed at its prior earnings report. If we take a look on the bottom here, you can see Q4 earnings 2017 here. That was not disclosed. There's currently an SEC investigation going on. You can actually see that here in the recent news in the middle there. GE stock turns lower after disclosure of SEC investigation. That's because of the shady accounting practices that it was using. So not quite sure this has hit its dip here. I think at some point this will become a very good investment, contrarian investment, but right now I think there's a lot more room for this stock to fall. I was taking a look at the stock to buy between 16 and 17. I still think it's a good contrarian investment, but it's got to drop lower. I'm looking at $13 to $14. If it drops into that range, I'll probably be picking up. Otherwise, I don't think the risk is going to justify the reward for this company. I think it's going to take quite a bit of time for this company to turn around, probably in the 3 to 4, maybe even longer time span. So I'm not really looking at this seriously right now, but if it does drop below $14 or so, I definitely will be looking at picking up some shares. So again, I thought $16 to $17 would be a very good buy point based on some new information and some new literature I've been reading about the company. I'm not quite sure that's going to happen. And really, this company is going to be a very different company after it emerges from all of this than what it was before. I would even say that it's not even going to be General Electric. It's going to be something completely different, a completely different business model. So GE, I think, is now dead. I think this is going to be a new company that I think could probably have some good business moving forward if it does get everything kind of put together the way the new CEO is kind of lining it up. But this is going to be a very painful process. It's going to take some time. And right now, I don't think GE is justified at buying in at $16 or so. But again, I'm not a market professional. This is my own personal opinion about the stock, so don't base any of your buying strategies off of what I say, but this is simply what I'm doing with the portfolio. Not currently looking at this stock until it gets probably below $14 or so, or some better information comes out about the company. So just wanted to talk about GE here, General Electric. Again, in contrast to other companies I think are very good contrarian investments, like L Brands, like Equifax, EFX. And there's also a few others, VFC, VF Corp, Wells Fargo and Company. I think those are very good contrarian investments, but I don't think GE right now would fit that type of strategy. So just wanted to really quickly talk about GE here again in response to a number of viewers on the channel who wanted to hear a little bit about GE. Let me know what you guys think about GE. What is your buy-in price for this stock? I think it's probably going to drop further. Not quite sure about that. If you guys will be buying, what price point are you taking a look at? Very interested to hear what you guys think about GE as well. So not to make the video too long, I'll kind of end it here. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. Again, if you guys have any questions about this video, other videos, please let me know in the comment threads down below. I try to respond to every single comment that I get. Sometimes it takes a week or so. I try to get back to everybody within a couple of days. So again, if you guys have any good comments about this video, other videos, any good stocks you're taking a look at, please let me know. Always interested to hear what you guys have to say. So kind of with that, I'll end the video, and we'll see you guys next time.